Hello and welcome to the Fintech Finance Virtual Arena. Today we've got a really special arena, and that's because we're going to be talking about the future of fintech, especially for SMEs. And who better than to join me here today is Ben Johnson from Xero. Ben, how are you doing?
Yeah, really well. Thank you, Doug. Thanks for having me today.
Well, I think, could I get you to give our audience a bit of background to Xero and your role there, please?
Yeah, of course. So Xero is a small business accounting software born out of the wonderful island of New Zealand back in 2006. It's been around for about 14 years now. Today, we serve around 2.5 million small businesses across a range of markets, including New Zealand and Australia, the US, the UK, and a bunch of other countries as well. Grown really quickly over that period. I joined the business in 2014. So my role today is Director of Global Financial Partnerships. So I spend my time discovering and developing relationships with banks, payment companies, lending platforms, really any financial services business that allows our product teams to build really compelling solutions that help our customers get paid, make payments, and access working capital on the platform. So I'm based in London and working on some really exciting stuff to help small businesses run their business and manage their cash flow.
Thank you. Excellent. Well, with that in mind, also, I think before we start talking about the future of fintech, I think we need to take a look back. So could you give our audience a bit of background as well onto the state and the defining characteristics of business banking in the lead up to the pandemic?
Yeah, look, it's a really good question. And, clearly 10 years ago, branches were a really big part of the customer service model. The consumers had some really good products in the retail banking side. Enterprise had some really good bespoke kind of banking relationships and banking products. The bit that was really difficult for banks to serve was that kind of segment in the middle, which was SMEs. And there's a few reasons for that. One is, we didn't have the cloud and digitization and mobile banking and all these really cost-effective ways for banks to engage with SMEs. So they were just quite expensive to serve. And so when it came to solutions like credit and working capital, which is really important to a small business that runs on, in many cases, pretty fine cash flow margins, it was just hard for the bank to serve that segment. So quite often that was the type of customer that was kind of left out in the cold. So I think that was probably where we were 10 years ago. If you're a small business and you had someone at the bank you could phone, you were probably in a pretty good position because many small businesses didn't necessarily have a relationship manager or someone that could get a bespoke service from. I think that's changed a lot over the last 10 years, driven by technology.
Now, do you think that fintech has come in and helped the banks kind of remedy some of these issues and characteristics?
Yeah, absolutely. So, I think there's so many threads we could kind of pull out here, but I think one is, how do you build a kind of engagement model or a customer service model that's cost effective? That means these financial service providers can actually meet small businesses at the point of need. And so at Xero, one of the things that Rod Drury, our founder, really had a thesis and a hypothesis on is, if we could get small businesses running their accounting and their business in the cloud, and we could connect them not only to each other, but we could connect them to their banking providers, to government and tax offices, and all of these applications that kind of add value around how a business kind of manages itself and grows. And so we're sort of at that point now where cloud adoption within small businesses for their business applications and their accounting applications has reached, almost critical scale in a lot of those markets. And what that means is that fintechs are bringing financial services to the small business where they operate. And what that really allows you in the banking context to do is serve those customers at a much lower cost. And so lending is a really good example of this. If you're a small business and you're looking for a £50,000 line of credit, 10 years ago, you would have to go and book an appointment with your bank. That might take 4 to 6 weeks. You have to bring a whole bunch of documentation about why you're creditworthy. You might have to bring some information about assets that you probably don't really have because you're a services business. And then if you're lucky, 2 or 3 months later, you might have a credit line. By then, it might be too late. What we're seeing now, particularly in kind of the lending space, is because businesses are running their accounts in real time online, because of things like open banking, they're able to share information about the cash position of their business to lenders in real time, and they're able to do credit assessment and underwriting using software and technology at a much lower cost. And you're actually starting to see specialist lending coming in and serve small to medium business. And so that's kind of one example how being online and being tech enabled and real-time data has helped small and medium businesses actually access working capital solutions or just financial services in a way that they weren't able to before. So we're really excited at Xero about, I guess, being that experience layer where we can connect our customers to those right financial products.
Now, one of the biggest issues SMEs face is cash flow, managing it. Now, how can fintech ever look to resolve this issue when it's technically not, in a lot of places, illegal to just not pay on time?
Well, it's one piece of the puzzle. So at Xero, we have a few core propositions and partnerships that we're really passionate about to try and solve that very issue. So if you look at sort of our markets, we have 700,000 customers in the UK, over 1 million in Australia. And so we're getting this really incredible set of data around how are small businesses doing in terms of managing their cash flow. So some of the things that we now know are, in any given month, about half of small businesses run kind of a negative cash flow, meaning that they're spending more than they're bringing in. Another thing that we've seen during the pandemic, sort of between February and around April, May time, the days to get paid blew out by an extra week, so about 8 days. And that's really critical if you think about getting money into the bank and being able to actually run your business. So there's a few ways that we're really passionate about trying to solve that. So one is, if you have real-time kind of what we call bank feeds, so getting your transactional data into Xero and then getting your bill data into Xero so you can see what expenses are coming up, you can run really accurate kind of cash flow forecasts and get really good visibility over what do the next 30 or 60 or 90 days look like. So that's kind of part one. Part two is around payments. So a lot of businesses sell on payment terms. They extend invoices. And to your point, sadly, a lot of them get paid late. And so for a number of years now, we've partnered with some online payment providers. So we partner with Stripe that allows our customers to take credit and debit card payments on their invoices. And we partner with GoCardless that allows customers to very easily set up kind of direct debit to collect recurring payments. And that was something that was really hard for a small business 5 to 10 years ago. If you wanted to collect direct debit payments, you'd chat to your bank, you'd have to put down a huge deposit, and it was pretty complicated. So businesses like GoCardless have really enabled that for small businesses. Remarkably, what we see is our customers that use Stripe or GoCardless get paid on average 50% faster. So you're already cutting down that time to get paid by half simply by giving your customers a really easy way to pay you. So that's a really big part of our kind of cash flow kind of proposition set to help small businesses. And then the working capital one is also really interesting. So for a number of years, we've partnered with both banks and alternative lenders that are integrating with Xero. So if a Xero customer goes to a lender like iWalker, which is an alternative lender that does credit lines and loans, they can connect their Xero data as part of their application. And that means that they can get a faster response in many cases and a really accurate price to what they can borrow. And so iWalker, like many other lenders, are using alternative data sources to really help underwrite smaller businesses, earlier stage businesses. And in many cases, they're making decisions in minutes because they're seeing information with open banking, with accounting data and credit reference agency data in real time. And so there's some of the things that we're seeing to help businesses in the UK and around the world get more access to those financial services that they need to manage their cash flow.
Now, do you think that open finance, or at least embedded financial services in other platforms, do you think we're actually going to see that on the horizon for a lot of SMEs?
So, in short, yes, I think you will absolutely start to see that. If you sort of track what's happening in the US at the moment, obviously with sort of big platforms like Apple launching their credit card, that's sort of powered by Goldman Sachs in the background. Google Pay is just going through a real transition at the moment. They announced Plex, their new banking proposition. And at the back end, that's banks that are powering a lot of that. It's Citibank and others. And so I think you're starting to see this real change where, banks are probably less worried about, building mobile experiences or, the customer acquisition piece and doing what they do really, really well, which is running a balance sheet, assessing customers for lending and risk. But actually what they're starting to really invest in is API layers, so they can make their banking products available to platforms. And so, enabling customer-facing applications like Apple and Google make financial services available within context. And so at Xero, one of our really big kind of strategic plays this year was acquiring a business called Waddle. And so Waddle is an Australian lending service or lending platform that we sort of see as a really interesting opportunity to bring our customers closer to borrowing against their debtor ledger. And so Waddle is a selective invoice finance platform. In the UK, we've recently just gone live with our first lending partner with that product. And so that's NatWest Rapid Cash. And so customers, some select customers can start to get access to working capital without leaving the Xero application. And it's not Xero doing the lending, because that's really not what we're great at. We're partnering with best-in-class banks and lenders to provide the finance, but we're helping connect customers to those products because we know who are the customers you're invoicing, we know enough about your cash flow. And it's really when you're in Xero raising invoices that you're thinking, gosh, I could probably do with accessing a percentage of that invoice value today rather than waiting 45 or 60 days for that invoice to get paid. So that's kind of how we're thinking about embedded finance. We're going to work with some best-in-class lenders on the platform. And I think you're seeing sort of other technology players like the Apples and the Googles doing similar things through partnership as well.
Now, going forward into the next decade, what do you think will be some of the, say, the biggest technologies that really will come in and help fintechs and SMEs going into the 20s?
Yeah, look, it's a really, really good question. There's a few different kind of pathways that could go down here. Ironically, it's probably the boring, invisible stuff in the middle that's actually the most powerful and the most interesting. And you touched on the banks a moment ago, and I think there's this kind of rhetoric going around that banks are worried about being disintermediated or they're worried about losing the customer experience. But actually, some of the biggest and most kind of powerful banks in the world are actually seeing this as a really strategic opportunity. So I mentioned Goldman Sachs on the Apple credit card. I mentioned Citibank, who are one of the flagship banks for the new Google Pay product in Plex. So that I think they see a really exciting opportunity to actually be the banking infrastructure for a lot of these kind of world-class customer applications. And so I think there's some really interesting ways in which that's being enabled. And so you see businesses like Plaid, which is effectively kind of, without there being open banking in the US, Plaid has effectively synthetically created open banking by connecting fintechs to banks. And that's what Google Pay is using in their new platform as well. And then it was only this past week that Stripe kind of launched their new treasury solution. And so for those that aren't familiar, what Stripe Treasury is effectively a banking as a service product, which is going to allow their platform partners, so think of a business like Shopify, offer banking products to their customers. So if you're an e-commerce provider and you have an online store with Shopify and you get paid using Stripe, you can actually then access a Stripe, or I should say Shopify bank account that's being powered by Stripe Treasury. And so at the back end, Stripe's going to be working with best-in-class banks as well. And so I think what you're really going to start to see is, that layer in between the Stripes, the Plaids. That's the really interesting stage of finance that we're in. And it's actually invisible to the customer, because to the customer, they're working with Shopify, or they're working with Apple, or they're working with Xero, but they're actually able to access a Goldman Sachs bank account or a Citi bank account through these kind of technology layers. And I think that's really interesting, because you want to access finance contextually and the parts that you're running your business. And I think that's really exciting for small businesses right up to enterprise.
I think one thing that this industry is really guilty of is applying buzzwords where they're not necessary, whether that be for technology or just describing things in incorrect ways. What do you think will be some of the biggest technological buzzwords that are misappropriated when it comes to helping SMEs going into the 20s as well?
Yeah, it's a good one. I think there's a couple here that people have probably read on websites or seen online. And so I think machine learning and AI gets thrown around a tremendous amount. And in many cases, it's software, right? Like what software has done for years and years is automate tasks or pick up bits of information and kind of calculate it and do arithmetic and all that sort of stuff, which is wonderful and which is really, really compelling. But I think there's a very big difference between, what software is doing and true machine learning, which is almost taking like human-centered, calculations and kind of brain power to technology and systems. So I think it's going to be quite interesting to see who are the technology businesses that are truly doing kind of machine learning versus those businesses which are really powerful, but they're effectively just, layering on software to kind of old automated, old sort of manual analog tasks. So that's certainly one. The other one is, for me, has really been big data. And so big data was this kind of promise that if we just threw as much information and data into a system, we'd derive some sort of value out of it. And I think actually what we've seen over time, it's really about smart data and using information and data in a really structured way to make really simple, beautifully designed products and services at the other end. And so they're probably two areas where I kind of keep an eye out for, and I'm always kind of curious to see, what are you putting on your website? What are you putting on your proposition? And what are you actually doing under the hood? Yeah. But then on the flip side, some of the really amazing things we've seen have been just really simple, beautifully designed products and services that are making people's lives easier. And I think that's really certainly been the approach I've seen from product teams at Xero, is how do we take real pain points and problems for small businesses, apply really thoughtful design to it, and try and build products that save time and make running a business a bit easier. So anyway, a couple of thoughts from me on that topic, but fun question.
Now, with the pandemic changing the way that the whole economy is geared up, especially here in the UK with complete lockdown, are we going to see more fintechs actually spring up to help the SMEs? Is the pandemic effectively being the catalyst to create a serviceable market for SMEs?
So I think small businesses can look forward to more brilliant sort of software and applications and services being built for them. Yeah. So absolutely, I see more and more of that going on. Some of the macro trends that we've seen this year, cloud adoption has definitely accelerated. E-commerce in the UK has jumped about 10%, which is obscene. If you look at sort of the progress over the last couple of decades, in the space of 4 months from March, everyone started shopping online. Even grocery shopping started to move online, which traditionally was about 5%. 5% of groceries were bought online. And so as more and more people come online for the first time, they're going to start looking for services that kind of wrap around that. And I think Shopify is another really good example there. When the high street shut down in the spring, a lot of those businesses were, really turned to, platforms like Amazon and Shopify to ensure that they could continue finding their customers and bring revenue into the business. So I think naturally we'll see that in financial services as well. This year, we'll probably see the acceleration of bank branches closing down. People that were a little bit reluctant about turning to online banking, online financial services, online payments, now are, starting to use, tools like a Shopify, like an Amazon for the first time. Okay, I need like a payment stack to get paid online. Is that Stripe? Is that Go Cardless? Is that something else? Okay, now I'm comfortable with that. What's next? Maybe I'll get a credit line and apply for that online rather than go down to my bank because I've been told not to visit my branch. So I think we're just going to see that, the early adopters have kind of come and gone, but we're seeing that next phase of the adoption curve where customers are going to be much more comfortable trying these things because they've kind of been forced to. And then they'll realize, oh, this is easy, this is accessible, and this is a really nice way for me to, access these services from the comfort of my home or my office. So anyway, I'm sort of all in on small businesses being served by more fintechs But then, of course, quality will rise to the top, and you might see some consolidation in some sectors over time as certain services start to mature.
So maybe 5 years ago, we saw people were questioning the status quo of banks and saying that maybe fintechs might actually rule the roost. That maybe hasn't come to fruition. We've seen a lot of the banks kind of claw back at quite a bit of the market share using the value that they already have. So looking forward into the rest of the 20s, what do you think the fintech banking ecosystem will look like?
Yeah, it's a great question. Again, just to kind of labor the point, if I'm running a big bank, I'm not worried about what technology players are coming and doing. I'm quite excited about the opportunity they present. And again, I've used the example a couple of times, but Google and Apple are not becoming a bank right now. They're partnering with banks, and they're partnering with a lot of banks. Google's initial proposition has 11 banks connected to it. So I think as long as you're thinking about APIs and you're thinking about how to let platforms and third-party services kind of access your system with the consent of your customer, then you have an opportunity to access more customers and derive a lot more value for your product and service. And so I think that's what I'm really excited about. And we've seen it with open banking in the UK. There's sort of over, hopefully I've got the stat right, but over 2 million API calls that have happened in open banking now. Xero is a tremendous part of that. So 70% of our bank feeds are kind of open banking feeds today. I think we're one of the largest consumers of the UK open banking APIs. The banks, I think, are deriving a lot of value from that because they're serving their customers really well. And we're going to create other propositions where Xero customers can kind of access products and services from their bank in a really nice connected way. And kind of the Rapid Cash working capital product is a really good example of that. So where do I think we'll be sort of in 5 to sort of 10 years time? I think we'll start to see the maturity of platforms consuming financial service products via APIs, either directly or through those layers like a Stripe or like a Plaid or whatever else it might be. Within that, we're going to see this awesome suite of services for small businesses that can effectively access, the right financial services product within their business platform, whether that be Xero, whether that be Shopify, whether that be something else. And I think that's just great for small businesses. It means that there's a real simplicity in design in what they're doing. They should get better access to financial services, and we should see less small businesses being left out in the cold because they're not having to go down to the bank branch with a bunch of documents and kind of have their fingers crossed for 3 months that they can get a loan. Actually, by design, what they should be able to do is kind of run their business online and access a bunch of those financial services in the platform where they do their business every day. And so I think we're going to just see that kind of improve over the next 5 to 10 years. And then pretty quickly, we're going to look back and kind of marvel at, oh, we used to do it this way. It's so much easier now. Like, I can't believe we sort of took our time getting there. So that's kind of my thought on it. It'll be iterative over the years, but we'll look back in 10 years and go, it's completely changed how we access financial services. And I think all those players are going to be for the better, including the banks.
Well, as a consumer, I find this absolutely fascinating. I cannot wait to see some of the innovations that come out in the next couple of years. Ben, thank you so much for providing your insight. I hope you've enjoyed yourself today.
I certainly did, Doug. Thanks so much for having me. I really, really appreciate it. And thanks for anyone who's been watching in.
Excellent. Well, and yes, to all our viewers, thank you so much for watching. You can catch the rest of the series and much more over at www.fintechf.com and, of course, YouTube and LinkedIn. So thanks for watching, and I'll see you soon. Goodbye.